Thanks for joining me today, everyone. I hope to wrap up this presentation, but actually, hopefully I more inspire you, ladies and gentlemen, today because trading is a tough business, and where do you start? And what's the right place for me in my trading? And that's the question that I think every trader asks themselves. Now, a lot of you are down a different journey, and you're at a different point in your trading career, and some of you are bewildered as far as what they should be doing. And I want to just, if I can do anything for you today, if I can at least help you figure out where you should be in your as far as what your trading is. And what I mean by that is the hardest thing and the most important thing that you need to find in your trading is what time frame should I be trading in? Am I meant to be a day trader? Am I meant to be a swing trader where I trade every couple days? Or am I meant to trade every single month? Or I shouldn't really be trading at all? So that's kind of where I want to inspire you guys today. Now, actually, before I get started, today's presentation is how to create cash flow with weekly options. And I'm going to spend a lot of time on that today. But before I do that, we've got the good old government disclaimer. How many times have you seen this in your life? How many of you could probably recite this like the Pledge of Allegiance in your sleep? You've seen this so many times. So here's a disclaimer. Basically, you can lose all your money and everything in trading. Of course, these disclaimers never say you can make a killing either. It's funny, they're always one way worded. So this is the negative disclaimer. I actually say, hey, look, you know what? You can lose a lot. You can win a lot. It all depends upon what you focus your time on. And if you're going to be good at anything, it's going to take time. It's going to take effort, just as if you're to open up a restaurant. And also, no representation is implied that these methodologies will make you money. We always encourage you to talk to your tax professional. And I'm sure you've seen this slide 1,000 times also. So with that, I'm going to talk about weekly options. And the reason why I'm going to do that is because there's different time frame traders, and there's different methods of making money. There's active and there's passive. Now, if you're a day trader, that's active money, because that's money that you're going to make in the next 2 seconds or the next 20 minutes or 2 hours. There's passive income, and that's what I really like about option trading, because with option trading, you don't have to be watching your screen every single second. If you want to get up and use the restroom, it's okay. If you want to get up and do something and go for a run, you can do that. Now, when I talk about weekly options, I'm trading within a 1 to 2 hour time frame, all the way up to maybe 2 or 3 days. And that's it. And the trade's over with. And some of these trades may be better for some people's time frame. And that's where I really started this whole presentation is, ladies and gentlemen, you got to find the time frame that's right for you. And if you're trading, let's say, a tick chart, and it's very short time frame, and the trades are coming too fast at you, and you don't feel comfortable, that's not a great time frame. What I want to give to you guys is another ability to make money in a different time frame, in a more relaxed time frame. So why I like trading the weekly options is, with options, you can make money on a weekly basis, which is slow for some, fast for others. And it's nice and consistent. We like that the trades last anywhere from just a day to just a few hours. I have a trade that I'll show you today called the 5-hour trade. It literally lasts 5 hours. Now, why would I want to take an option trade over, let's say, an index trade on, let's say, oil or gold? Well, the thing is with options, they're a little bit more forgiving than an index trade. When I get into an index, let's say I'm going to go long an oil or the S&P 500, I'm getting in at a very specific point, and whether price goes above or below it, I will either win or lose. With an option trade, it's almost as if it's got a built-in stop order for you for a specific range. And it's kind of interesting and different from anything else because you don't have to be dead on. You can be somewhat close to where things are, and you can still make money. So I kind of like that. And in addition to that, the trade can actually start going against you, and you can end the trade profitably. Now, you can't really do that with trading in the E-minis or the S&P 500. You're either right or you're wrong. So with weekly options, there's more of a fudge factor where, if you get in and it can go against you a little bit and you're still fine, which is really, really cool because that's really not very common in other people's trading. So I look for 2 to 5 day returns, and a lot of the times the returns can be that or equal to that of what you earn on a monthly basis trading options. And that's what's really intriguing about trading weeklies, is because the returns are actually pretty decent, and in different markets the returns can be even better based upon volatility. You also have the ability to hedge a trade. Now, let's say that Apple is going to come out with a new iPhone 10, right? And the iPhone 10 is coming out, and you don't know if it's going to take off or head down lower. Well, with weekly options, you can hedge the trade. You can actually build in the trade so that if it goes against you, you have a finite loss, and it decides to crash overnight. So there's a lot of cool advantages. But what I like to do is take advantage of the 3 to 5 day market swings. And the market has a very cyclical, rhythmic, and very precise market swing where it's just like a metronome. It goes up, it comes down, it goes up and comes down. And it's somewhat predictable. And I'll show a little bit about that to you today. So with weekly options, and we probably have a whole bunch of different types of traders out here that trade options, from monthly traders to those who buy options on a daily basis and get rid of them. So I know we have all different variety of traders out there, but what I like about the weekly options is that they're overpriced compared to the way options are on the monthly options. And most people are familiar with monthly options who are in the trading world. And I'll get to a couple diagrams that will show a lot to you. What's cool about weekly options is they decay by the hour. Now, it's true of other options, but I'll tell you the rate at which they decay is absolutely phenomenal. And that's what's so intriguing, is the rate of decay. So, index options, a lot of times, depending on if you're trading index options or stock options, some will stop trading on a Thursday, and that's it. Stock options will stop trading on a Friday. It all depends. And I'll tell you, if to put a presentation on with the weeklies, things are changing all the time. And what I'll have to say is, go to the Chicago Board of Options Exchange, and they will, and that's where you want to look at the options and what's going on, because they change things all the time on this. And I don't want to say anything today because it may not be true tomorrow if you listen to this at a different time. So I love trading the S&P 500 weekly options because there's a ton of volume, and statistically they make it really easy to trade. And what I like is they're European style. They last day of trading is generally a Thursday or a Friday, and they have limited risk and tons of volatility, and they're cash settled. Now, I'm not going to go into all these. I have a very short time today that I can speak, so I don't want to get into a lot of this other detail. What I really want to show you today, guys and gentlemen, ladies and gentlemen, is just kind of crack the door open to look at the possibilities of what type of cash flow is possible and what type of trades I like to do, and setting this up as more of a passive income. Now, I know a lot of you guys, gals and guys, day trade. How would you like to, and here's a problem that a lot of day traders have, including myself, is way back when I day traded, I pretty much had to say, you know what, today I got to make $200 day trading, and I got to do that. And so you start the day out saying, hey, I got to make this money, right? And if you don't make money on a Monday or Tuesday, you're getting kind of edgy and saying, hey, look, I got to pick up the ball and do some extra trading because I got to average $200 a day. Well, what if you had a passive income method where you placed a trade and then you could go back to your day trading where you had, I don't know, $200 come in that week on your weekly's trading. Now, one day out of the week, you're not as under the gun to do your option trading or your day trading because you have other money coming in. See, when you have other money coming in, and it could be from real estate, it could be from weekly options or whatever, getting money from your from other accounts that they have that make you money, that really enhances your day trading because then you're not under the gun to say, hey, look, I got to make $200 this day. It really takes the pressure off. And because of that, you actually will trade better because you're not forced to trade. With weekly stocks, they're American style. The last day of trading is generally a Friday, and the settlement is on Saturday. They have limited risk, and they settle with stock. So I'm not going to spend a whole lot of time on actually, I'll spend a little time on stock weekly options, but again, my whole idea is just to crack the door open a little bit and open your interest as far as what is possible with trading weekly options because it really, really makes a lot of difference. And it doesn't cost a lot of money. Generally, there's only a 5 to 10 point strike price. One contract can cost as much as $300 to $500 to trade. You can make anywhere from $50 to $150 per contract. And which options have the weeklies? Well, you got to go to thecboe.com. I remember there are only 4 or 5 weekly options, and the whole concept was brand new. And here, I'll just switch to my chart screen. I mean, look on the left. These are all weekly options from Apple Computer to Akamai, AMD, Google, Gilead Sciences. I mean, wow, there has to be well over a couple hundred now, from Yahoo to Xerox. I mean, there are tons and tons of weekly options. So there's a lot to trade out there. I will spend a little bit of time and show you some things on the chart, so that will make it a lot easier. All right. So with that, let's go on and let's talk about which one? There it is. The components of a successful weekly option trade. Now, when you start trading the weeklies, you've got to keep in mind that to do it successfully, these are the components that you need to do it properly. First of all, you need to understand the chart and determine market direction. Now, some of you are looking at it and going, well, that's not hard to do, and some of you are looking at it as, well, gee, John, that's just all I had to do. I could, that's the number one, that's a $60,000 question, right? Well, it's not that hard to determine what the trend in market direction. It really isn't. People overcomplicate things. Once you understand which direction it's going to go, then all you need to do is apply the proper option strategy. Now, this is where it can become tricky because there's well over 29 different basic option strategies. Which one do I use? Do I do a condor? Do I do a credit spread? Do I do a double diagonal? I mean, this is where it comes down to just keep it simple. Just pick 1 or 2 option strategies that you want to use and have them line up with the proper chart and market direction, and just stick with that. I don't think it's smart to become a master of all 29 strategies. Pick one or two, and I'll give you the ones that I like. So after that, you'll implement the strategy, and with proper money management. Proper money management is extremely important. I spend a ton of time on money management. Every trade has an exit. You don't get into a trade unless you know where your exits are located. We have our alerts set, and we know what our max loss will be. We know what our targets are going to be. It's all pretty much mechanical at that point. Now, do you think trades are going to go against you? Actually, I'm going to tell you up front, you're going to lose on trades. It's going to happen. Expect it to happen. So if you're going to expect that problems are going to happen, then why not have a 911 backup plan for each trade? It just makes sense, doesn't it? So every trade has a 911 backup plan, and it's implemented when a trade is going to start to lose. Something I'm very big in my courses. The types of trades that I look at with weekly options are credit spreads, hedged covered calls. Now, my only caveat is I will do a covered call if the trade is only on option expiration day. So if it's on a Friday, I will do a covered call on a Friday. If it's any other, if there's still more than a couple days away for expiration, I will hedge the trade to limit my risk and limit my loss. Very, very important. I will do covered calls with limited risk, only on a Friday or a Thursday, depending on what kind of trade it is. And I'll do what's called the 5-hour trade. Here's something that's interesting with the 5-hour trade, and I'll kind of just go on the side on my chart, or on the screen a little bit. The market opens up at 9:30 Eastern Standard Time. And from 9:30 to 10:30, it generally goes in one trend, in one direction. And typically, I'm not going to say always, you don't really want to you don't want to use absolutes when it comes to talking about the market. But after the first hour of the trading day, the market then generally will take a trend up or down, rarely just sideways. Now, if it's an FOMC day, you probably don't want to trade this, right? So after the first hour of trading, stocks will generally start to trend, and when they do that, I can place a 5-hour trade, and that's something that I'll show you I'll show you one of those today if I can get time. So those are the trades I look at. Let's look at the 5-hour trade. Now, what I have in front of you is what time decay looks like on an option. And in a nutshell, basically, options are time-based units. And if I have an option that goes for, let's just say 10 days, every day that goes through, let's say the option's worth $10. If there's 10 days left to expiration, every day that goes by, this option goes down in value every day until the expiration date, right? If the stock was just going sideways, let's say, or the index. So basically options, if you own an option over time, it starts going down in value. Now, think about this. If I'm trading a weekly option, and I'm trading an option that will go away in 2 or 3 days, think about this. The last day it trades, guess how much time value that option loses? It's actually pretty significant. So let's say this is the last day that this option trades. And so for fun, I'm going to just say that this option is worth 75 cents. Well, in the last day that this option trades, look at how time value is. Now, in the morning, tons of volume, things move fast, things move really, really hard, really quickly, right? Okay, so that will actually increase the volatility and the option price may go up a little bit. And then as the day goes by, if the stock just goes sideways, look at this thing, it just starts losing value. By the minute, by the hour, just going lower, 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 and lower. And then by 3 o'clock Eastern Standard Time, this option is worth 1 penny. And the value goes away so quickly that you don't even, it just evaporates right in front of you. So that's part of what we're looking for on a 5-hour trade. Is number one, we're looking for an option that's out of the money or near the money. And I want to be sure everyone can see my screen here. Okay, I'm just refreshing everything. All right, very good. Okay, everyone can see it. All right, so what we'll do basically with a 5-hour trade, and I'm losing time very, very quickly here, so I'm going to kind of cut to the chase, is what if I can find a trade or a stock or an index, and it's the last day of trading that option. And let's say it's worth 75 cents. Well, what if I could sell this option for 75 cents and in 3 to 5 hours later buy it back for 0 and make anywhere from $75 or $750 in a matter of 3 to 5 hours? That's what I'm looking at doing. And it's really not that challenging to do. Because if you sell an option the last day, the time value is absolutely going away very, very quickly. So let's go ahead and take a look at the chart, and let's get into this a little bit. And let's talk about, let's look at S&P 500. Probably one of my favorites to trade because it's the S&P 500, believe it or not, is very predictable in a lot of ways that you look at it. Now, here's a daily chart of the S&P 500. I'm going to zoom in a little bit more. Now, one thing I'm looking at the bottom of my screen, and I don't know if you guys have Thinkorswim. Actually, you know what? I'm going to give you guys a huge, huge gift right now. And so if you're an option trader, I'm going to show you something that's really, really cool, because I'm going to teach you more about implied volatility than a lot of people have learned in 2 or 3 days studying it. Now watch this. At the bottom of my screen, I have what's called implied volatility. And here's basically what you need to know in a nutshell. Here we have a chart of where implied volatility is. And if implied volatility is high, that means we want to be a seller of options. If volatility is low, we want to be a buyer of options. Now this is if you're holding overnight, if you're holding for 2 or 3 days. So this is how I look at a nutshell to know if my options are overpriced or underpriced. When volatility is at its high on my chart, I know it's a great time to be a seller. When options are really low down here, I may not want to be an option seller at all. I'll probably switch to an option buyer. So what this is telling me is if price is at the upper end, I want to be a seller of options, and I want to be selling premium. If it's down here at the bottom, right down here, I want to be a buyer of options, and I want to buy premium. There's volatility in a nutshell. All right, let's get back to the chart. So what I'm looking for on my weekly options is a couple things. Charts tend to move in a 3 to 5 day swing pattern. Now, I'm not an Elliottician. I'm not huge into Elliott Wave. Some people get it to work. I have not been able to successfully trade Elliott Wave, so I'm not going to get into that at all. And I'm not going to criticize it one way or the other. I'm just going to say that it's not worked for me. And if it's worked for you, fantastic. But what I can tell you is charts tend to move in a 3 to 5 day swing in a way where they'll go down or they'll go down 3 bars and then maybe up 5 bars. And then maybe down 3 and then up 5. So it has a little bit of a pattern going on. And generally when you have 3 days down, you will generally have 1 day up. So when I look at when I look at the chart, I want to look at where are we in the sequence. And as you can see, we've got what 3 days that we did start to head down. Now we're starting to head back up right there. So I look for what the 3 to 5 day swing is, and then from there, what I like to do is I like to look at the option chain. Now, for some of you, this is the first time looking at an option chain. Don't let it get you too overwhelmed. But what we're doing is we're looking at the SPX options, and there's 2 days left to expiration. But look at all these. We got weeklies that have 16 days, 23 days, 30 days. I mean, there's tons of weekly options out here. Well, what if, let's just say that this was a Thursday, and the last day to trade an SPX is generally on a Thursday. Well, what if I could go ahead, and the price is currently at $19.95, right? Well, what if at the last day I could sell out the September 2000 call and bring in $2.90 or $2,900? And by the end of the day, that thing would be worth 0. How would you guys like to play a game like that? Even better, what if we zoomed in on the chart, and let's go to a 15-minute chart. Okay, S&P 500 has a pretty predictable pattern right now. Ready? Down, up, down, up, down, up, down, up. Now, when this thing starts heading down, who would want to play a game against me that says, if price does not get to here in the next 3 hours, go pick up $2,900? Is that right? 290? Did I say that right? Let me just double check. Yeah, 290. Not bad, right? That's a pretty cool game. Some of you are saying, well, John, why don't I just trade the binaries? Well, that's a whole other ballgame. But what if this thing started heading down, and I could pick up $2,900 if price does not get to 2,000? Would anybody want to take that bet against me? I think you probably want to take the trade with me, right? If it starts breaking down and it starts heading to new lows. So what we'll do is we'll look for trades where just in the next 2 to 3 hours, we're going to bet that price is going to go in a certain direction. Now, charts tend to be somewhat predictable, and they also tend to be pretty much, they like to follow patterns, and they like to be repetitive. And one thing I'll take you through more specifically is generally how stocks or indexes trade during the day. You get the morning site, you get the morning. So what goes on in the morning? Let me redo that so it's clear. What happens in the morning? This is really the first hour of trading. Well, there's a whole bunch of games going on. There's a whole bunch of things that generally are pretty predictable the first hour of the day. And then from, let's just say, 9:30 to 11 o'clock, you have the mid-morning cycle. And there I go on and I'll explain what goes on and all the things that happen, because it's a different ball game. It's almost as if the first hour trading is like they're playing baseball. And then after that, the mid-morning cycle, they're playing golf. And then you get lunchtime from 11 to 1, and it's like they're playing football. And then from 1 o'clock to 3 o'clock, we'll call this midday, they're playing soccer. Now, do you want to use the same strategy in baseball as you do in football? No, it's a completely different game. And you need to recognize that it's a different game going on. But once you understand all these different cycles and what happens, and then from the 3 to 5, you got the close, you got pro tennis, it makes everything a little bit differently. Because do you ever notice that different strategies often work differently or not at all throughout the different types of the trading day? But if you understand what game you're playing, and if you understand what's really going on, it's a lot easier to make money. So in my course, I'll explain how things happen. And just looking at this 15-minute chart. Actually, let's do that. Look at this 15-minute chart. I mean, you guys start to see anything that generally happens? Well, look at this. First hour of the day, you get a rush of direction, right? Then you get your trend, and then you get your finish and your close. First 15 minutes of the day, you get your trend. They move it in one direction, and it's a simple thing. They're either going to continue the trend or move it in the other way. Back this day, right? They moved it up, they finished the first hour of the day, and then they trended it. Every day is the same. Sideways move, and then they trended it. So you guys kind of see how every day it's kind of the same game. It's just, okay, well, the first hour of the day, they're going to move it in one direction, and then after at 10:30 Eastern Standard Time, I should say, 9:30 Central, they will move it in the opposite direction or continue trend. It's that simple. And once you know how they're going to do that, then you'll know how to play the 5-hour trade. So I don't jump into a trade until after the first 1 hour of the day. I'll wait. Because once you have all those orders hit, they move it in one direction. After that, then I'll go ahead and they'll start moving in the opposite direction. I'll get into my trade, and they'll start moving in the opposite direction. Now, sometimes, and this has happened, and when a market tends to peak and it's starting to change into this is on a daily basis. When the market peaks and starts to head up, and then it's ready to change, here's one little nuance that will happen. And it will happen right at midday, right about 1 o'clock Eastern Standard Time. There can also be a change, and that's what happened here. The first part of the day they moved it up, and then right around 1 o'clock they just reversed it because the market really doesn't know what it wants to do. Okay, so that's what I basically do is I like to find stocks. I like to find indexes. I love trading the Russell 2000. The Russell 2000, here's a couple secrets that I want to share with you guys too. And that's, did you know the first half hour of the trading day you know what's funny is how many people have you heard say, "Oh, stay away from the first half hour of the trading day. It's not any good, and I just stay away from it." You guys hear that quite a bit? Well, the reason why people say that is because they don't understand the first half hour of the day. They don't understand the games going on. And I've actually spent a ton of time and understand all the games they're playing. And it's actually very predictable. And it's the same thing pretty much every day. They play their games, and the novice traders fall for it, hook, line, and sinker every single day. The first half hour of trading, did you know that the majority of the time, I'm not going to say all the time, that if you're trading the Russell, the first half hour of the day, that if you simply look at what's called the NQ, it will lead the Russell by 15 to 60 seconds. Now, what do I mean by that? Well, if the Russell spikes up, guess what? 15 to 60 seconds later, the Russell will spike up. Interesting, huh? And if the Russell starts heading down, I'm sorry, if the NQ starts heading down, go ahead and look over at your Russell chart. Guess what happens on the Russell? It starts heading down. Now think about this. Wouldn't it be pretty simple to trade the Russell if all you have to look at is what the NQ is doing? It's like cheating. It's funny because you look at the NQ and it moves and then bam, the Russell moves. But then the funny thing happens, ladies and gentlemen, is this. Is at 10 o'clock Eastern Standard Time, the game changes. And guess what? The Russell will lead. And guess what it will lead? The S&P 500. So if you're an S&P 500 trader and you simply look at what the Russell's doing, it will generally, and I'm not going to say all the time, it will generally lead what's happening on the S&P 500 by 15 seconds up to 2 minutes. Funny thing, huh? So let's say you're trading the weekly options and you're trading the SPX. What do you want to do? Well, look at that. Moves down the first hour, then there it goes, right? Well, think about this. If the first morning, if let's say let's say that the SPX or the Russell heads down the first hour, and as soon as the Russell starts going in the other direction, guess what I want to do? I want to look at what's happening on the SPX, and then I'll look to place a 5-hour trade. Because number one, I'll have a good idea what direction it's going. And then two, I'll place an option trade that's in the opposite direction. So if everything is taken off, heading up, boom, I'm going to sell a 1160 put right there. Maybe I'll sell it for $1. And price is moving away from there. Not a bad way to make some money, huh? Think about it. Use the power of what the other indexes are showing you. It's a very, very powerful tool. So anyway, I just wanted to give you a little bit of an insight as far as what I do on my trading. Again, I'm going to tell you that I'm not always right, but the truth is when I do mess up or I do make a mistake, it's all about 911 strategies. So if I get into a trade and this starts things going against me, I have a backup plan as far as what I'm going to do. And I don't think many people are honest enough to say that, hey, look, I do lose on trades. And that's one thing I would definitely want to be honest with you guys is, hey, look, I lose just like everyone else, but I just lose differently. Because I have a strategy that I implement the second I get in. And you've got to expect that it's going to happen when it does happen, you got to know what to do. So if I get into a trade and I sell this for, let's say, $1, and it starts going against me, you've got to have a plan to get out of that trade and maybe move it up here for $1 and go in the opposite direction. That's something you've got to be implementing. Now, one thing that I'll be opening up now for my students is, and I know I've got a lot of questions on this, is I have a course called 5K to Financial Freedom. And this course is often recommended doing it in your 501, not 501c3, 401k for tax purposes. I'm going to also say that you should, before you do anything like this, make sure you talk to your tax professional, your CPA, to have them help you determine the right way to do this. I'm not a CPA, nor would I ever want to be one in my life. I don't like accounting. That's just me. But if you're gonna take $5,000 and start investing it in a way that has tax benefits, you always want to talk to your CPA. But what if you could start taking money and producing some passive income? What would that change? Well, here's what you'll learn in my course. Module 1 is the 5 secrets of financial freedom. What the wealthy know that you don't know yet. The core principles of how money works. Now, I think it was Einstein that said it best, that compounding money is the most incredible thing ever discovered. Module 2, I get into the weekly options, and I get into much greater detail than I did today. I mean, today I just pretty much touch the surface of what I do, because I want to show you how to supercharge your cash flow. And I'm going to show you 3 major ways to profit from weekly options. Module 3 is my step-by-step cookie-cutter method to trading the weeklies. Now, certain parts of trading is mechanical, certain parts is psychology. And psychology is really the toughest way, is the hardest part of the trading, because anybody can place a trade, anybody can put a trade on. It's all about making sure that you have the right money management in place, you have the right 911 strategy in place, because like I said before, I guarantee you that trades are going to go against you. And understand that trading is a process, and the more cookie cutter you can make it, the better you'll be. The more rule-based you're going to be, the better. There we go. Determining trend, and I know I started my presentation out with determining trend. Well, it's really not that hard to determine trend, and I'll show you how to do that. And you don't have to be a master trader to determine trend. Did you know that if all you did is 80–90% of the time properly define trend, most of any type of trade would go its way automatically? And then I'll get into determining the intraday trend. But the problem with the intraday trend, and something I touched on before, is you got to understand the inner game that goes on in the first part of the day, because if you think the first hour of the day is the trend, it's not. It's a total game. They're playing you, and they're going to do the opposite of what you think they're going to do. Understanding volume. Now, did you look at my chart? I don't think you saw it. Let me bring up Google. I'm a big volume profile guy. You guys like volume profile? Very, very important part of your trading. Volume tells you what the real game that's going on. It's where the big money is. If you're not a student of volume profile, you're at a huge disadvantage. I simplify learning volume profile. A very, very powerful tool. Module 4, how to predict price movement. I'll get into price action. I'll get into more volume profile. I'll do what I call the quadrant method. The quadrant method allows me to cookie cutter the entire process so that when it comes time to adjust, change a trade, it's very, very simplified. Understand implied volatility. Now, I showed implied volatility very, very briefly today. Implied volatility is all about, are my options underpriced or overpriced? Because if they're underpriced, I want to be buying them. If they're overpriced, I want to be selling them. I'm going to show you how to use time decay to your advantage and how volume helps you see the big picture. So what I'm basically doing is every time you place a trade, it's like you're painting a picture. And you're putting all the proper things, you're not doing too much or too little, and you're completing the picture. Problem a lot of traders do is they overcomplicate things and they spend way too much time on more analysis than that's needed. A lot of times less is more. Module 5 is Introduction to my weekly credit spreads. I will spend a significant amount of time on option strategies. I teach them in a very simplistic fashion. You don't need to have you know, a NASA computer to learn all this stuff. I keep it very, very easily. And how the weeklies differ from traditional credit spreads. So I'll show you the distinctions between those two, and I'll show you multiple examples of how that all puts together. Module 6 is how I insure my trades. Now, unless I'm holding a trade for one day, I'm really not a big fan of covered calls because stocks can move fast and they can move really, really quickly. If I do a covered call trade, I'll tend to hedge it because I'm all about limited risk. Guys, have you ever had a stock open up the next day down 20, 30, 40 points? I mean, I could bring up any chart and show you where that's happened on multiple stocks. I'll show you multiple examples. Module 7, Introduction to the weekly calendar spreads. Now, just a little bit of caveat, depending on what kind of market you're in, we're going to do calendar spreads. Basically, I look at the VIX. If the VIX is from, let's say, 10 to 20, I'm not going to do them. If the VIX is from 20 to 30, then I will. When you have very, very low volatility, calendar spreads can be a little bit more challenging and a little bit more difficult to implement. And this is how I generate a potential 20% returns on my trade in 1 week, is with these trades. I love calendar spreads when the conditions are right. Actually, I prefer put calendar spreads most of all. Put weekly calendar spreads are my favorite. Plus, I'm going to give you 3 bonuses, guys. 90 days to my Trader Success Network, where members, they trade live with me, one of my instructors, Tuesday, and I give you the trades that I do every week, 3 trades a week. This will accelerate your learning curve, and you can watch over my shoulder and trade in simulation or live if you'd like. If I adjust a trade or if I have to implement a 911 strategy, I will give you an alert to your email, and I'll get that out to you. And if you have trades that you like at that time, you can submit them to me, ask questions. It's more of a Q&A time, and if you need help on anything on the course, I'm there to help you out. It's a $500 value. Now, the pawn trade is really my 911 repair strategy. This thing is so valuable. I had actually talked to one of my old students today, and Randy, he became really, really good at this repair strategy because there's just going to be days when things go against you. And if you know how to repair them, it's really not that big a deal. And I'll show you how to take a losing trade, turn it into a winner, or at least break even on it. That's a $500 value. $5 trade, I just broke the surface of that today. I get more in depth. On occasion, I will do them in my live training if it is on a Thursday. And basically for me, it's the closest thing that I do day trading options. So lot of people would say, well, how much would I expect to spend on this type of course? If you add it all up, my 5K to Financial Freedom course, my bonus 1, trade live with me, bonus 2, the Pong trade, bonus 3, the 5-hour trade. It's a $3,191 value, but you could learn on trial and error, and that's how a lot of people learn. That's how I learned until I started putting stuff together. So do you want to learn from the School of Hard Knocks, or do you want to learn from someone who's been there? So I'm not going to charge you $3,191 or even $2,000, which, of course, it's worth that alone. I'm not going to even charge you $9.95. This is a steal, ladies and gentlemen, today. What I'm going to give this for you is the entire 5K to Financial Freedom home study course, the 90-day trading with me, the 91 Pong trade, for just one payment of $497. This is a phenomenal deal. I don't think this thing will be up more than 1 day. So grab it while you can. It will pay for itself very, very quickly. I've got things in this trade that even if you're a seasoned trader, it will really open up your mind. So just go to investtosuccess.com/5K and sign up today. Guys, it's only $1.36 a day over the next 12 months to get part of this system. Now, ask yourself that if I'm paying $1.36 a day, is that more important than my financial freedom? Now think about that. Look how much money you spend on cable TV, a cup of coffee, movie tickets. Just think of the little things that you spend every day, taking just a small portion of that money and investing in your future. And that's just $1.36 a day, ladies and gentlemen. You know, if you want to go and go to the dollar store, you'll get a much better deal with myself. Now, some of you are saying, okay, for $497, is there any money back guarantee? Absolutely. So I put my money where my mouth is, and I prove it, and I give you a 5-time your money back action guarantee. So, okay, thanks, Tim. So with that, if you're not satisfied, I want you to take the trades with me for at least 2 weeks per month, starting with $5,000 in real or simulation money over the next following 12 months. And if you don't make at least 5 times your investment back, $2,500 in real or simulated profits by the end of 12 months, show me proof that I actually took action. Guys, I want people who take my course, I want you to take action, not just tire kickers. But don't delay. I can only offer this special 50% discount for a very limited time, and I reserve the right to pull this at any time. So it's not going to last very long. Go to 5K to Financial Freedom. Of course, it is now at investtosuccess.com/5K. And this will not be up probably more than a day or so, and we will be taking it down. And the next time we offer this could be 4 or 5 months from now. So, if I'm going to take these trades like the calendar spreads, I want volatility to be over 20% or to over 20. Under 20, I will not take a calendar spread because there's not enough volatility to pay for that long-term option. And I'll go ahead and actually buy a 3 or 4 month option and sell out a weekly against it and make that 20% on that trade. So hopefully I answered his question right, because I can't see the questions at this point.
Okay, I think that's all the questions we have for now.
All right, well, thanks for joining me, guys, and go to investtosuccess.com/5K, and I'll be glad to be working with you guys shortly.